US Congress passed the fiscal cliff deal on Tuesday when lawmakers approved a deal to prevent huge tax hikes and spending cuts that would have pushed the world's largest economy off a fiscal cliff and into recession. Joining me on the line to discuss this further is Baumohl, Chief Global Economist at the Economic Outlook Group. Hello, Bernard. What do you think the passing of the fiscal cliff deal means for the US economy?
The agreement that was made in the final days of 2012 will turn out to be, I think, a net positive for the U.S. economy, primarily because it takes recession off the table. There was a real concern that if the U.S. did suffer a jump off the fiscal cliff, we would have clearly had, I think, a recession in 2013. But now that we're not going to see a significant increase in taxes, it pretty much assures that we will not have a recession this year. And that is, I think, uplifting to businesses and to households. And so I expect that we will see a stronger economy in 2013.
How do you think the deal will help the US economy in the longer term, if at all?
Much depends on what's going to happen in the next couple of weeks when Congress and the White House focus their discussion on spending cuts and on the debt ceiling. My sense is that with the agreement in taxes, the economy is poised to grow much faster. The only outstanding question right now is how much spending cuts can we expect to see from Washington, and over what time frame? If we see, fairly significant cuts, but if they occur gradually, I don't think it's going to do that much damage to the U.S. economy. Tax increases can hurt the economy much, much more than cuts in federal spending. So our expectation is that the U.S. economy this year will actually grow around 3.5% versus last year when the economy managed just 2% growth. So on the whole, I think we're going to be seeing better growth this year, in large part because the private sector, companies and individuals, are going to be more comfortable that they don't have to worry about significant hikes in taxes, and be more willing to invest, to hire more workers, and for households to spend more.
Although the deal has been passed, aren't there still major issues which have been put off by Congress?
Well, the major issue still revolve around how much the government is going to cut spending in an effort to reduce the deficits and to take control of the national debt. If a lot of these spending cuts will take place in the next 2 or 3 years, that can obviously have a detrimental impact on the economy because, let's face it, 2% growth is still fairly weak, and we really don't want to see a huge cutback in government spending. And so if it turns out that the agreement in the next 2 months will show that we're going to have gradual cuts in spending over the next 10 years, the pain will be much less for the U.S. economy, and I think that will further encourage businesses and households to ramp up spending. So I think overall, although there are still some outstanding issues to be settled in Congress, I think we have a lot more reason to be cheerful than to be concerned about the economy in 2013. I mean, just take a look at the overall reaction in global stock markets. It was very positive when the news came out that there was an agreement reached on the tax side. And I think a lot of investors are coming to realize that the U.S. economy is actually going to be stronger in 2013 than most other countries in the world. And so I think the U.S. will continue to look attractive in 2013 despite the fact that we are going to see some cuts in the federal spending.
And how do you think we can expect markets to react?
I think the market will react very favorably this year because all that pent-up demand for business investments and for more hiring will finally be unleashed in this year. All that pent-up demand among households that have held back on spending for the last 5 years, I think they too will begin to ramp up spending as well. And that's going to increase revenues, profits, and it will be reflected in stock prices. So we're looking, as far as the major stock indices are concerned, we're looking at double-digit gains in the Dow, the S&P, the NASDAQ, and the Russell 2000 for this year. We also see some very positive performances in the stock markets outside the United States as well, and specifically Australia, Brazil, Canada, and in some instances Europe as well, now that many of these economies that have been of such great concern to investors last year now appear to be stabilizing. And that is a positive development for the global financial market.
Thanks for joining me, Bernard. Here at Dukascopy TV, we'll be keeping you up to date with the latest financial news. For now, though, goodbye.